Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, stocks in New York were mixed overnight ahead of employment data for July. The S&P and the Dow a little lower, a moderate gain on the Nasdaq, some uncertainty out there about what the jobs report will show. What's the story in the global markets?
Yes, if you look at Thursday, the Dow and S&P declined slightly by 0.26% and 0.08%, while the tech-heavy Nasdaq rose 0.41%. Clearly, there is a differential in terms of where the market money is flowing. With a lower interest rate environment, as the 10-year government bond rate has fallen quite significantly, we have seen interest towards the overall growth stocks, particularly the Nasdaq index. The money seems to be flowing related to the growth-related stocks. Now, if you look at the non-farm payrolls numbers, which is expected to be coming out today, it is expected to be about 250,000. It will not be too much of a surprise to the market. In terms of the overall unemployment data, it seems to be quite stable. But while the numbers for the jobless claims seems to be rising steady pace as the central bank continues to be quite aggressive in terms of the monetary policies. A lot of people were hoping that the central bank might loosen up in terms of the tightening process, but central banks seem to say that they are determined to fight the inflation because the price control is the most important factor. We think that, though, that kind of comment is not going to affect market that much because we are seeing quite a bit of inflation number coming down in terms of the energy prices. We've seen the oil price actually falling below $90 per barrel for WTI. We have not seen that kind of numbers in quite a bit of time. Due to that, we think that the energy prices, the implication of that is going to be quite declining quite significantly in August. So when we find out about the numbers in terms of the July numbers and August numbers, we will see the numbers coming down gradually. So if that's the case, we don't think that we should be too worried about the market correcting because of the tight monetary policies. Of course, we have to wait and see how market's going to play out on the basis of the economic growth rate. A lot of people are expecting the economic recession within the next 12 months of time. If it's not going to be that case, obviously market can go up further high. But if we're expecting the recession, then it will be difficult. So we'll wait and see how things play out in terms of the monetary policy as well as the economic numbers.
Right. Well, Korean stocks closing higher today. The KOSPI at about 2,500 points. Healthcare, pharmaceutical stocks doing well, and financials too. Foreign buying continues, and the exchange rate coming down below 1,300. Tell us about the domestic market.
Yes, as you said, foreigners, the continued net buyer of the Korean market, affecting the market to further rise. If you look at the KOSPI, it's up about 0.72%. It's close to 2,500 territories, slight below that. And also Nasdaq is at 830, rising by about 0.8% or so. Foreign investors' net purchases have been continuing. As far as the KOSPI, 373 billion won of net buying happened. Nasdaq about 57 billion. On also futures market, net buying of about 185 billion. So we are seeing all markets, the foreigners are continuing to be net buyer. The reason for that is because, as we were expecting, Korean won has appreciated. The Korean won to US dollar rate has declined to 12.99, so falling below 1,300 level. We haven't seen that in 4 weeks. We did see this number going up to as high as 1320 territories, so it has appreciated quite a bit. However, though, we continue to be worried about the consumer price index, where we've seen a 6.3% year-on-year growth rate in previous month. And also, we are seeing the manufacturing numbers are shrinking somewhat, causing to be quite a bit of uncertain. But we think that the domestic consumption numbers are not going to be too poor in the future because of the continuation of wage increase that we're seeing in terms of Korea. And in terms of the unemployment ratio, it doesn't seem to be rising that rapidly. So, yes, we are concerned about the global economic condition and the global recessionary period. But so far as we are looking at the numbers, we are not seeing a possibility of economic recession anytime soon. And therefore, Korea seems to be quite reasonably okay.
Well, in trade, Korea recorded a current account surplus for the first half of this year. It was bigger than expected, about $25 billion, but smaller than the surplus a year earlier. Seems that's largely on higher energy prices. How's Korea doing in trade?
Yes, if you look at the South Korea, the current account surpluses has happened continuously for the second straight month in June. Its amount sharply contracted from a year earlier because of the import costs rising due to the high energy and commodity prices. But nevertheless, the current account surpluses were happening. If you look at the January to June period, country's cumulative current account surpluses came in at $24.8 billion, sharply down from $41.76 billion a year earlier. But it topped the BOK's first half projection of $21 billion. Nevertheless, it has continued to be those net surpluses. If that's the case, we don't see any major reason why the Korean won should depreciate against U.S. dollars. We are seeing continuation of quite strong export numbers, and KOSPI, Korea is doing quite well in the economic standard in terms of the global economy. If you look at the continuation of huge increase in the crude oil prices and coal, particularly 53.1% and 189% respectively in June, causing quite a bit of uncertainty in regards to the current account surpluses or the trade surpluses. But we have seen in the recent month that the overall energy prices are coming down quite rapidly, and most of the commodity prices seems to be coming down by more than 20 to 25% in the last 1 month. So therefore, the number for July should be reasonably okay, and going into August should be reasonably okay as well. So if that's the case, then we don't see major reason why the Korean won should depreciate in the future, but rather we will see Korean won continue to appreciate around current 1,300 level to as low as maybe 1,250 territories over the next 1 month or so. If so, we think that foreign investors' net buying should continue to happen, and a market should be reasonably showing a rising trend to maybe the fair value of 2,600 to 2,700 KOSPI.
All right, we'll keep an eye on it, Mr. Yu. We'll have to leave it there for today. Thank you, as always, for coming on the program, and have a great weekend.
Thank you. You too.